Let me introduce our speaker today. So he is IIT Subramaniam, Director of Quantum MF. So Quantum MF is Quantum Mutual Fund, and he has over 2 decades of experience in investment management and financial services. He joined Quantum Advisors Private Limited in 1996, and he has covered global sectors for 4 years. Since June 2000, he has managed India dedicated portfolio for India-based clients, and since 2005, he has been managing India dedicated portfolio for international clients. That's it. Let me invite our speaker.
Hi, thank you. Thank you, good morning, and wish you all a very happy new year. Glad to be back in a campus after a long time. I've never been to IIT Kanpur, but it just looks fabulous. I feel like sitting and studying underneath some tree. So I hope you all are enjoying your studies. So going back to the topic, he gave me a brief introduction. So my career has entirely been in stock markets, and I began my career in 1990. So when I first began my career, it was just the beginning of a big boom in India, a very big boom, 91 to 93. And when the stock markets were booming, if you are in the stock markets, you tend to earn a lot more than what you would normally get, because there are bonuses. You can buy stocks in a boom market. All kind of stocks go up, all kind of services companies go up, and you can literally rake in money. Plus the management, in order to make you work harder during those periods, because more clients come in, more trades need to be done, they tend to have a very liberal policy. So in my case, in my and my colleagues' case, the liberal policy was, if we made 1 lakh a day as the broking fees in those days, which was very large, we were allowed to eat in any 5-star hotel in Hyderabad. So we used to slog the whole day, touch that 1 lakh, and then go and drink and binge till 11, 12, and then come back and work. Because the work was so large, we used to come back and work till 3 o'clock, then go home, sleep for 3 hours, and back at 7 o'clock at the trading desk. That was how it began. But it gave me a very wrong picture of the whole scene, because I thought it was a boom. It was actually a big scam. So for many of you who don't know the history, there was a scam called Harshad Mehta scam. So this smart guy, Harshad Mehta, he just took the banking money, invested in the stock market, rigged up the stock prices, and a lot of people lost tons of money when the markets crashed, when the whole thing came up. So it was for me a big learning experience. What I thought was fundamental changes were happening. It was happening. India was opening up in 1991. But this particular event was actually a scam. So stock market is a dangerous place, very interesting. Sometimes it can be a genuine bull market, a genuine bear market, and sometimes it can also be scams. So just you need to have some background about what goes on in the public limited companies. So I have a few slides on, since the topic is on entrepreneurship and investments. I will start with public companies because that is where my background is, but feel free to ask me any questions on even private companies, because ultimately you need to generate profits if you are an entrepreneur. Sometimes you generate through a public limited company, sometimes you will generate through a private limited company. So maybe around 15 slides, but at any slide you feel like asking, please do ask. Unless you ask, it won't be interactive. And I am bringing in from my side what I think is a certain perspective which is very useful. Many people will have different perspectives. You all are from the background of technology, so I guess technology and technology related events will have a much bigger influence on your thinking than the way I look at it. But I will still give you some perspectives as to how you can go about thinking like an entrepreneur. How do you identify opportunities? What drives the GDP? What drives the stock markets? So are you all aware as to what is a GDP? If any of you knows what is a GDP, you can just share it with me, then we can talk, because that's the starting point. Any idea? No? Okay, so yes, so it's gross domestic product GDP? If you're an economic student, this would be a topic of serious discussion. It is nothing but the sales of a country, right? If you had a company, if you were selling a restaurant, if you are selling some dishes, if you are a manufacturer, you manufacture certain things, you ultimately have a sales figure. This is nothing, GDP is nothing but the sales figure of India over each year. It's a flow. If you accumulate all the sales of all the companies, public companies, private companies, consumption companies, investment companies, you would get the GDP. So first is you need to have where India is, where the global is, and for that you need to just understand what's the GDP, what's the trend, how are things growing, why are they growing, what is driving the sales, and therefore what you can do in that. Ultimately, if you are going to come up with a product, or if you are coming up with a services company, you have to meet or cater to this GDP requirement. And the GDP requirement would be a function of technology changes, would be a function of the number of people in the country, the kind of people in the country, young people, old people. If you read today's newspapers, it will tell you US is slowing down, Europe is slowing down, largely because people there are very old. They don't have young population, and they all did not have enough children over the last few years. So therefore it is an aging population. Japan is another classic example, very old population. You have India, China, some of the emerging markets where there are a lot of young people. So we have a young population. So therefore the needs of each country will be very different. In a young country, the demand for certain products will be high. In an old economy, the demand for certain other products will be very high. And I just took from 1980 because that was when most of the data was available. So the top line sales in any company would be a function of two things, right? One is volume and the other is price. So if you were to look at, say, Videocon, right? Videocon would tell you how many televisions it sold. So that is volume. And each year the price may have gone up by 5%, 10%, 15%. So it's a combination of both. The number of TVs sold, 100 TVs, 150 TVs, 200 TVs, and the price at which it is sold, right? When you look at the volume, we call it the real GDP growth. That means taking into account price. If the product was priced at 100 today, and tomorrow if it is priced at 105, we say that the price has increased by 5%, right? But keeping that 5% aside, how many more TVs did I sell? Did I sell 5% more, 10% more? That is called real GDP growth. So this chart is about real GDP growth. India has grown at an average of 6.2% each year, right? So each year, then if TV was the only example, if TV was the only product sold in India, every year we sold 6% higher than the previous year. So we had 100 this year, next year we would have sold 106, third year we would have sold 112, and so on and so forth. And then you add the price increase, right? So on an average in India, the inflation in the past has been around 5%, generally 5 or 6. So actual GDP growth would have been 6 plus 5, 11%. So India's top line grew by 11 to 12% on an average since 1980, right? Each year 11%, 11%. These are all 5-year terms based on the kind of governments we had, right? So every year, every 5 years, you can say every year 11%, 11%, 11%, 11%. So from a small amount here, it would have become a big amount over here. So today, India's top line, today, if you look at the GDP of India, it's around $2 trillion. Sorry, I'm used to telling in dollars to my clients, so I'm just giving you a number, $2 trillion. If you go back to 1980, it probably would have been around $300 million or $400 million, very rough guess. So what was 300, 400 million over a period of years has become $2 trillion. Right? A big growth. So each year we manufactured different things, people consumed different things, price grew. And this is despite whether you have a Congress government, Janata government, NDF, BGA, BJP, NDA, whichever type of governments you take, India has certain entrepreneur skills, right? All of you, once you come into the job market, many of you might be naturally inclined to do business, a born entrepreneur. Many Indians are like that, right? We may not have great government policies, but we may call it a jugaad system, we may call it any system you may want to name, but a lot of people in India have this tendency to be a good businessman. If we had a very supportive government, probably India could have grown much faster. But keeping aside the kind of government, keeping aside the kind of regulations, India has grown in the past. And I see no reason why it cannot grow over the next 30 years, 40 years, 50 years. Fabulous growth we could have. And all of you will participate in that, either as employees, either as policymakers, either as entrepreneurs. So since we are talking of entrepreneurs, you probably, if you are interested, you need to think what drives it. So one is GDP, right? In 1980s, I think just about the TV just about came into India. I still remember in 1978, when I was in Bombay, the entire colony had one TV, right? It was just before the Asian Games were launched. India was experimenting with TV, and today you have TV in like multiple TVs in the same household. So look at the growth. So you take any product, the kind of cars we sold in the first 10 years in the 1980s were Ambassador and Fiat. Today you have Toyota, you have Volkswagen, you have Ford, you have BMWs, you have Jaguar. So again, product profiles changed. We never had mobiles here. It was only a landline phone, and that too you had to wait to give a call for long distance. So if I was to make a call to Kanpur from Bombay, I have to book a call and wait for him to come back and tell me that now you can speak. Right? I had to wait for three hours before I could get that call. Today I can just use my mobile and call anybody. Scooters, motorcycles, if we booked, it can take around 5 to 7 years for it to be delivered. So I remember in South India there are a lot of people, particularly if you are from Andhra Pradesh, dowry is a big system in Andhra, and the parents used to book for motorcycles and scooters 10 to 12 years before the daughter's wedding, because by the time the daughter was ready for marriage, the motorcycle would be ready. That was 1980s. Today you just walk, you book, you can be out with a motorcycle in 3 hours, or you can be out with a motorcycle the next day. So from a very controlled economy, now we have grown, and in between this period and this period, technology changes would have taken place. The kind of population which was here and here were very different, so therefore the kind of products they bought would have been very different. And if you fast forward over the next 25 years, the kind of products they will buy will be very different than what they are buying now. Right? Today or yesterday, I think in Delhi they have experimented with a huge experiment between odd and even cars. The idea is to bring down pollution. But maybe 10 years down the line, we don't have to worry about it if everybody had an electric car. So look at this GDP in the context of what India would need over the next few years when you are thinking like an entrepreneur. This was the population pyramid in 1990. Okay, we had around 870 million people. Today we have 1.3 billion people. Between 1990 and now, we have added like 400, 500 million. Now look at this, it's a very interesting chart. I will show you quite a few of them. See, we had a lot of young people here, not even young, we were actually toddlers, teenagers, a big chunk of the population was over here, right? So if you were an entrepreneur here and you started imagining, if all these people were to grow into this age and they had talent, you can do two things. Either you can create a product to be sold to them 10 years later, or you can use this talent for something else, maybe to launch a global product. You can interpret the population pyramid whichever way you want, right? So you had large number of students, toddlers, kids, teenagers, a few middle-aged men, and then very less old population, right? Old population was very less. Fast forward to 2000. Now you can see this has shrunk a little, right? If you see, this is very broad. And now if you see, it has shrunk. So people have grown older. So this bulge has become bigger, right? Again, if in 1990 you are right, we can't deny our age, right? If 10 years later, if you are 20 today, 10 years later you are going to be 30. If I am 50 today, 10 years later I am going to be 60. I can't stop that. You can smartly use that data to decide what you want to do, what kind of products you want to launch. This was in 2000, right? 2010, it has shrunk even more, right? We have a lot of people here. Therefore, one of the reasons why India could boom from the IT services point of view was because there were a lot of talent available here. So if you were to go back in 1990, imagine if you were a Narayan Murthy, or imagine if you were any other techie in India, and realize that this population is going to be over here, and India has a decent education system, there will be a lot of engineers available, you would have probably started to plan, what can I do with that population, what can I do in terms of launching. So same way like Narayan Murthy, you can think of any other product, consumption product, soaps, detergents, shampoos, televisions, mobiles, all will be linked to what is happening to the population, and of course technological changes, etc. So 2010 is this. 2015, now it's even more. Now actually you can see that this is bending a little downwards. We are having less growth, right? India's population used to grow at around 2% per annum. Now it has slowed down because we had this population explosion. Then we taught people that family planning is important. So it's becoming now 1.5, 1.6%. And maybe few years down the line, it will grow at 1%. Then you will have more people over here and less people over here, kind of situation which Japan or Europe or US is facing. So therefore the product needs in 2015 will be very, very different. So keep this idea in mind. If you are an entrepreneur and you want to know where India is growing, what kind of products it will consume, what kind of talent will be available in India, what can you do with that talent to cater to the Western world, this can be a starting point for you to think. Now from population, before I show you 2025 and 35, let's see what happened in terms of the top 10 companies. There are multiple companies in the private sector, but I don't have much data, so I'm just using the public companies, right? So the same set of population which you saw now, in 2000 you saw the kind of population, right, which was very, very basic, right? You just needed soaps and shampoos and detergents, those kind of products. And therefore, Hindustan Lever was a very large company around that time. They were manufacturing very, very simple stuff. In 2000 is when they started experimenting with those sachets, right? Shampoo, which you are getting now. 2000 it was considered an innovation, a big invention. But what they were doing, they were essentially, instead of making a bottle which people could not afford, they came up with a 50 paise sachet, 1 rupee sachet, and captured market share. So you had Hindustan Lever. 1990, I gave you an example. If you were Narayan Murthy, you saw that there is a huge amount of young people coming into the engineering or IT sector, and can that be used to do something for the Western world? So Infosys became big. Infosys they did an IPO in 1994 or 95. By 2001, they were among the largest companies in India. In terms of market cap, I'm not talking in terms of sales, in terms of market cap. We can always go and search and find out what the sales were, market cap. Then you required banking. SBI was the only dominant one at that time, right? Other banks were not ready. Government had just did an IPO. You had a young population, needed banking needs. SBI was very, very large. And again, looking at the talent pool available in India, entrepreneurs like Dr. Reddy started doing reverse engineering, what they call take a medicine which was available in the US, rework it backwards, try and see if it can be made it different. If it can be made it different at a lower cost, then go back and launch it in the US. And he made tons of money. So population is a starting point to either cater to or to use the talent. And successful ones are like Infosys and Dr. Reddy, and then people like Reliance, who knew that oil is going to be a big driving factor, right? You will have vehicles, more number of petrol, more number of diesel being consumed. So can we do something in that space? So you had Reliance. Fast forward to 2005, oil was still big, but you had more tech companies coming. TCS became among the largest, and private sector banks. Over here, looking at the population, it was only SBI which was scattering. India decided to open up banking, and then you had some aggressive bankers coming in like ICICI, and he became the largest. But the most surprising in this period was Bharti became the largest. I just gave you an example. In 2000 or late 90s, if you had to make a call, you have to wait for 3 hours to make a trunk call, 4 hours to make a trunk call. But world was changing. Bharti caught on that technological change. They launched in the late 90s the mobile phone. The mobile phones were initially expensive. Mobile services were very expensive. Today, I remember in 98, the cost per minute to receive a call on your mobile was 16 rupees or 15 rupees. Right? Today it's like I can make a call, I can receive a call, and I still not worry about my bill. Right? So from that, he took on that mobile technology and launched a company which by 2005 became among the largest companies in India. So he made use of the population and the technological change, double benefit. Right? Young population needed to talk, and as they say, Indians are by nature, we like to talk a lot. He catered to that, right? And therefore he made money. And entrepreneurs can make some bad mistakes based on past lessons, because I told you, like, people like to talk in India. He launched and he made big money in that. Then recently they went and acquired, around 5 years back, a company in Africa. Right? Because they saw the population was big, the country was large, maybe they can replicate the Indian model in Africa, but they are struggling. And do you know why they are struggling? One of the very fundamental mistakes they realized later, because Africans don't like to talk. So you have a mobile, you have a very cheap mobile, but he is not able to get the same benefits which he got in India, because Africans are not like Indians. So as an entrepreneur, you will have these all kind of challenges. You were successful based on one technology in one market, but you can be miserable with the same technology, same kind of population in some other market. All because of one simple fact, that people there don't like to talk, people in India like to talk. So again, as an entrepreneur, that's an input for you. Who is using your product? Is the situation the same? Are the habits same? Are the characteristics of the people same? Then it can make or break your business which you launch. 2010, all of these companies were there, and you have one more IT company, Wipro, also becoming large. So what it means is that the young population which was there, it was throwing up lot of engineers, lot of people who could work in the technology industry. Cost of the technology itself became low. In early 90s or late 90s, we had met Narayan Murthy once at his office. So they just had a small room from where they were delivering the software to the Western world. And in the next room, there was one long pole with a lot of wires around it. So we just asked him what it was. He said, whatever I am producing here, I am using these wires to send it to the Western world. Right? And then he casually made a comment, the wire cost is coming down dramatically. So the talent pool was available, the cost of delivery was coming down dramatically. And they used that very well. The entire IT industry used that very well. Since we had a lot of talent, earlier the limitation was cost of delivering. The cost of delivery became cheaper as more and more IT mobile companies and telecom changes happened. And therefore there was a huge explosion in India. You had Cognizant, Capgemini, TCS, Infosys, all of them coming in, and you also had Wipro joining in. And then India also started doing PSU unlocking, right? So you had NTPC in 2005, but still large enough in 2010. What do we call Government selling is called, they take the large public sector undertakings and they start to sell it to the public. That became very large. By 2015, most of these companies are there, but you had two other companies very interestingly coming up, HDFC Bank and HDFC. ICICI Bank was very aggressive, but it was never very good in asset quality, right? So how you grow, quality of growth matters. ICICI just went after volumes. Again, many of you ask your parents 5-10 years back, you would very easily get a call from ICICI Bank and they will just tell you your demand draft is ready. Whether you applied for a loan or not, they will talk to you like that. Right? They will sell you a credit card, debit card. They were very aggressive. So therefore, they lost out on asset quality. They didn't have good customers, and so they struggled. While HDFC Bank and HDFC, they were very small in this period, but they focused on quality. And 15 years later, they became very large without a issue on quality. While ICICI Bank struggled quite a bit. So you use the same data, same people, but what are you delivering? Is it a high quality product or is it a low quality product? It will be a huge differentiator over the next 10-15 years. Something may work today because it is cheap, but in the long run, it may not work. Somebody else with a superior product can come and launch and take away market share, which HDFC Bank and HDFC did. Again, HDFC had a fantastic business model. You saw the population pyramid, more number of young people coming in, so therefore need for houses. So all HDFC did, all its life was give you a housing loan. And they had the house itself as a mortgage. So nobody would dare default. You don't want your house to go away, right? So fantastic business model. Check the guy, see if he can repay the loan, give him a decent loan, 80% or 60% of the housing cost. And India needs large housing. And they became very big. Then therefore they could launch HDFC Bank, HDFC Mutual Fund, HDFC Insurance, all of that. So quality, these two guys is an example. Changing needs of the world and the population and how to use the population, TCS, Wipro, Infosys, they use that very well. Same like Dr. Reddy over here. And business models change. Hindustan Lever, which was large here, went out completely. They lost out in this period. Due to competition, they didn't know how to launch what kind of products. They were still large, but they were not the largest. But surprise, surprise, by 2015, they are back in the top 10. What did they do to reinvent? They realized that Indians are now growing wealthy. They are staying in their own houses. And can they launch a more premium product? So now you can see in 2000, products like Dove was not available in India or available less because people were in general poor. There was no aspiration to buy a Dove. People would use a Lifebuoy. I remember in 2099 we used to use Lifebuoy, but India was growing. So India needed premium products. So Hindustan Lever, which lost out for a few years, reinvented the wheel and came up with many premium products. Dove is a classic example. Any other FMCG company you take today, they have a basic variety of product and they have a premium variety of product. You have Lifebuoy at 10 rupees, you have Dove at 20 rupees. It does the same work. One smells a little better and the brand ambassador is a more sexy looking chick, but that is their business, right? They are very good in their product, but they are very strong in their communication. They will tempt you with a brand power. So this is an example of to reinvent. What you lost out here in these years, they came back big time. And they are again dominating. So as an entrepreneur, you will have challenges from government, you will have challenges from in the population, you will have challenges from competition, and you will have challenges from the kind of products you launch. And as I said, the differentiator between quality products and quantity products. What do you want to do? So these are examples, and I'm not talking about here now about e-commerce companies. All of you must be reading. Now e-commerce companies are becoming big. They are using the same product. They are selling you the same Hindustan Lever product. selling you the same mortgage product, but e-commerce platform makes it much more easier, much more cheaper. What is Flipkart doing? What is Amazon doing? What is Growers doing? They are just selling you the same soaps and shampoos and vegetables and televisions. You know, what were being sold by other companies through large retail malls, now the internet is being used. So while internet is very good, you need to know how it works, what you can sell, but go back, what is the primary driving factor for the product? You can't stop me from, unless you come up with a product which says that, you know, the moment I enter into a shower, I will come out clean and I don't need a soap. That's a different issue. But otherwise, whether I buy it from Amazon or I buy it from a retail shop, a soap is a soap I will need. So go back and see what is the population. Can you cater to them, or can you tap their strengths to do something else globally? You can launch a product or you can launch a service. This is a service, this is a service. And both can make you tons of money. You have read a lot about microfinance in India right now. It's nothing but basic finance, but it's going down in terms of, you know, the lower the pyramid. There are a lot of still poor people in India in this bucket. This is just catering to that microfinance, huge opportunity, and you can get into that. So some examples, you can ask me any questions later on this. And this is how the market capitalization has grown from, you know, 1.8 trillion rupees in 2001. See, it has now become 25 trillion. So huge wealth creation. And this is only in the public space. In the private space also, this kind of wealth has been created. So if you are thinking of being an entrepreneur, remember the opportunity is immense, because population is not dead. We still have the great population. But be aware as to what kind of changes come. And then you require other skill sets. You can't just look at the data and say, I will do a business. An entrepreneur needs to be a leader. He needs to be a team player. He needs to be courageous. He needs to be hardworking. He needs to be a good organizer. He needs to be a good presenter. There are many things would come up. If you had read recently about, say, housing.com, right? Now, he was a good guy, a genius, very good in his understanding, but he was very poor in accommodating or talking to the people who provided him capital. So finally, he had to leave that company. So if you are an entrepreneur, idea is important, but to grow, organization is important. So you can't just be a one-man show and say, I will do everything. When you are young, you can do that. But as you grow old, you need a team. And housing.com failed because he did not build a team. You need to have a very good accounting team, finance team, marketing team, technology team. You can't be a one-man person to launch if you want to become a serious entrepreneur. So a lot of opportunities, and I can see this significantly going up over the next few years. Massive opportunity for all you guys when you come into the market. So I said I showed you here. So what will drive this number, which is beyond the screen, is the change in again population. By 2020, this shrinks even further. Now look at this bulge. Lot of people in the age of between, say, 14 to 40, which was not there earlier. So therefore now you have lot of middle income people. The kind of products they buy will be very different than the kind of products we bought 20 years later. And all these people are going to grow old, right? By now you should imagine that if you were to fast forward this to 2030, this will will go over here, right? Look, say 2020, just 5 years later, 2025, see, more number of people going into the bulge. Look at 2035 and see now. So the population would have changed big time by 2035. The needs would be very different. Like as somebody said, the reason why, say in Japan, golf is played than cricket. India is playing cricket today because we have young population. But as we grow, India's sporting needs will be different. Right? Why is Italy now not able to win as many football World Cups like it did earlier? Because there is no population. Many decades back, they were winning almost every World Cup because they had a very, very good young number of people who took up that aggressive sport. But as that country grew older, they can't play the same game. So they lost. So India would also have the same situation. You will have less number of people like Sachin Tendulkar and Yuvraj Singh because the population is changing. So we will adopt new sports. So if you are an entrepreneur wanting to get into sports, look at this. Golf can become big in India. Right? You can look at that. Wine drinking, why is it becoming big? Because of the population. As people age, they don't like very hard drinks. They start to take a milder drink like wine. So wine can be a big event. Medical needs, right? As the population grows older, the cost of medicine will be high and they will need medical help. So that will also go on. So that's to give you a background on entrepreneurship, what you can do, what kind of products you could launch. But assuming that you all become entrepreneurs and you make lots of money, what do? You need to have an investment plan. So from being an entrepreneur, looking at the population, feel free to ask questions. And look at this example I gave you on Infosys. From a capital of 10,000 rupees, its net worth is now 50,000 crores. Massive increase. And most large companies, Bharti and all, would be in similar situations. Small capital becoming significantly big. Amazon. While Infosys used the Indian IT strength to cater to the world, Amazon is now coming to India looking at our population bulge, that more number of people are going to consume in India. So how do I sell? So they are coming into India to tap into that population. So he is selling in India big time like Flipkart and other companies. So, but it goes back to the same. What is the population? What kind of products they will buy? And what can I do with that population? That question you need to ask. Then you can look at technological changes, business model changes, product changes, and then decide how you want to go about it. So then, as I said, like once you create wealth, you also need to have some idea about how to preserve and how to grow. So I'll just go through a few slides on that. Right? You will normally say you earn your income, spend something on expenses, and then you will save. I keep telling my retail clients, and I'll tell it to you all as well. Out of your income, first keep aside something as savings. When you are young, the propensity to spend is very high. You're excited, you like to spend. But the more you save, even in the initial years, the impact on your wealth will be huge. The compounding impact is very high. So the moment you start working, focus on your savings as well and keep your expenses low. Set aside something for savings and the balance is what you should spend for expense. This looks dramatic, but a cup of coffee in a few years can be as high as 12 lakhs. So let me just go back from here. Once you keep your savings aside, you can invest those savings in property, in equities, in gold, or in cash. Right? This will all depend on your age, risk appetite, at what stage of your life you are in, and what are your objectives. So please remember, once you're an entrepreneur, you will make tons of money. But if you squander it, you won't be able to grow. You need to also save, and save that in properties, equities, gold, cash, any of these products. And the goals can be any of these. It can be for retirement, for child's education, marriage, financial goals. It can be for, that investment needs to grow at a certain rate of return, and then you need to give it time. So whenever you plan something, if you are investing in equities, you need to have at least a 10-15 years of horizon for your savings to grow. And that goes back to that 1 cup of coffee, because I'll show you some examples on that. This is something which you have read during your childhood, but it still makes sense. Small amount of savings can have a big impact. It does not get reflected in short periods, but over long periods it has a huge impact. Right? That 30 rupees, that cup of coffee, if you were to save just 30 rupees per day, and if it was compounding at 10% every year, that whatever you save, and you do it over 25 years, it can be around 12 lakh rupees. It's just a mathematical formula. It looks dramatic here, And nowadays, people I don't know in Kanpur whether Starbucks has come. It's very normal for students in Bombay, Starbucks. The coffee cost is nothing less than 150 bucks, right? So you are 30 rupees can be 12 lakhs in 25 years. You can imagine if you are spending 150 rupees, what is the impact on your wealth? It's very huge. So if you are smart entrepreneur, you have made your money, also ensure that you protect it. Why is Wipro Aziz Premji today able to give a huge corpus for education? Because during his time when he was earning money, he did not squander. He saved that. Today he talks to us as to how to grow that corpus. How do we build that corpus? He talks to people in our community to try to understand the impact of compounding, because that 5,000, 10,000 crore which he has given for education, if it was managed well, it can become humongous and can cater to thousands of children later on. So whatever you do, remember that compounding is very big. If you know a very well-known international investor called Warren Buffett, right? All his wealth has come from few trades, but maximum through compounding. He invested smartly and then just stuck to that. And it grew and grew and grew and grew. And now today he has become one of the world's wealthiest. When you earn money, please ensure that you save, don't squander, and please invest in equities, gold, debt, whatever is your comfort level. Equities will give you high return, but it's also risky. And then if you were to save over 20, 25 years, the impact is very, very large. So very briefly about Quantum, we are the 29th mutual fund in India, but we are the only one to do direct. We don't use any distributors. Ours is a pure online model, or give us a call and we will send you the form. And why we adopted this? Because in India, the distribution system is very opaque. And if you give me 100 rupees, if I was using a distribution system, 5 out of that 100 would go to give it as a commission to somebody who just collected check from you. And that 5 can have again a compounding impact. So we wanted to cut that cost. So we said we will go direct. So we were the first to launch direct. Now other mutual funds are doing. Focused on low cost, very simple range of products, and very disciplined in our research. So I will not buy a stock till I'm very sure that we have done enough research why we should invest in that stock, etc. So these are our products from a risk and return profile. So the higher the return, as you can see, generally the higher the risk. All the equity funds are over here. All the debt funds and gold funds are over here. Low risk, low return. And in between you have the quantum multi-asset. So when you allocate your money, when you allocate your savings, it has to be a mix of this. When you are young, you can take certain risks. So a higher proportion of your money should be in this area, equities. As you grow old, 50, 55, 60, then you should have more in this, because then you will need regular income. You may or may not be employed, but your corpus has to give you money. It doesn't matter whether you are rich or poor. Even a rich guy may not want to take risk. Right? Again, giving an example, like people like Aziz Premji, initially they would have invested a large amount here. Today he has a big corpus, he doesn't have to worry. But he may not want to take a risk on that corpus. So he will have more amount of money in this low risk, low return product, but still compounding at a certain. So when you invest, don't look at just 1 year returns, because 1 year returns can be influenced by many things. You need to look at 5 years, 10 years, etc. So over the last 1 year, if you look at equity in India, it has not done so well. It's up only by around 1.56 and gold around 2.47. Does not look very attractive. But if you look at, say, over 5 years, again, it doesn't look so good, 5% per annum. And gold is also around 5% per annum. But if you were to look at 10 years, it has compounded at 12% per annum. 12% is big, right? And if I do a 15-year chart, it can grow at 15%. If your savings can grow at 12 to 15%, it can have a huge impact 10 years down the line, 20 years down the line on your corpus, right? As opposed to something growing at 4%, 5%. So the rules of investing: diversify, equity, property, gold, and liquid funds or debt fund. Allow it to compound. Have a goal. Why are you saving? Are you saving for your retirement? Are you saving for your... See, when you are young, no, you don't worry about retirement. Well, you have not even started your career. Why will you worry? So I recognize that when you join, you may start to think about marrying. You may want to buy a house. You may want to take your parents on some trip. Or you may, or if you are married, you settle and you get married quickly, you may want to think about a larger house, you may want to worry about your child's education, but somewhere down the line you will also start to think about retirement. And the earlier you think about these goals, the better your financial position will be. So look at your objectives, why you are saving, and allow it to compound. Compounding is the biggest lesson you should keep in mind. For the more the number of years the money is remaining invested, the bigger impact it will have at the end of 5-10 years. And finally, with whom are you investing? What kind of people are they? You can't blindly give money to everybody, right? You need to be careful. So what's the background? Do they have the experience? What's the process? And finally, what is the performance? So that sums up in terms of entrepreneurs, what kind of business models you want to develop. FMCG, technology, pharmaceutical, IT, I gave you some examples. Population, where it is growing, what kind of population, Indian market, global market, that's another way to look at it. If you're good in technological changes, can you use that to become an entrepreneur? That's a lesson you can take. Capital is available. If you have a great idea, capital today is not a problem. But how do you build a team? So at other skills, team building skills, organization building skills, which are all very important. And then once you start to make money, don't squander, because whatever you have done till date, it'll evaporate if you squander. So then you need to have a plan for investing, and that money will compound over long periods of time. So these were my few thoughts on entrepreneurship and investments. Happy to answer any query, any slide you want to see. We can go back. Over the next 2-3 years period? Yeah, see, over the next 2-3 years is very short term, but it will still be good. So let's go back. No, let's say we are here, right? You already saw that there are a lot of people in this bucket. More number of youngsters will probably come to the job market, right? And finances are available. So the demand for automobile will still be quite high. So next 2-3 years, next 10 years, I don't see any risk to the growth in automobile industry. But there could be regulatory changes. I think the pollution impact is so high, most governments state governments can say that you need to reduce the pollution. So either the cost of the vehicle may go up or alternatives may come. Better public transportation system or electric goods. That can come. But now you're already seeing, right? Google is experimenting with driverless car, right? You don't need a driver. Tesla has got cars based on battery, right? If you're able to store the solar energy in a battery, then you don't need the polluted vehicles at all. Today we have the sunlight. Today just outside you can see the sunlight. Can you store it, and can that storage be used in a vehicle? So the kind of cars may change, but you will still need some mobility. So it will still be good, subject to regulatory changes. You saw the big incident with Volkswagen in the US, right? Such a big fiasco they had. So regulatory risks will always be there, but opportunity, as long as this population is having employment, it will be there. One area I didn't touch upon is risk. This is assuming that India is able to provide jobs. If the government does not create enough opportunities in terms of providing jobs, we may not have the benefit of this population as we are talking like this. We may have a situation like Egypt, Arab uprising, right? Violence. What happens if young people looking for a job, hungry to grow, eat well, and there are no jobs? Either it can lead to dramatic changes in politics, you can again have communism come back, or there can be street violence. So that risk remains. So while this is an opportunity, if as a country we don't take care of the needy, it can have a huge effect on us later on. So even as you grow, as you get good jobs, please remember that there are a lot of people in the poor bracket. We need to take care of them. So whatever little you can do, you should do for them. Because if they don't grow, then they will not allow you to grow as well. So whatever products today we create, the bottom of the pyramid people cannot be ignored. That's a risk. But otherwise I don't see any risk to the automobile industry. I think it will still continue to grow.
Can you describe what is mutual fund?
So mutual fund is so when you want to invest, like say in any of these so if you want to invest in any of these companies, you can do it on your own. You just have to go to a broker, give your cash, and then he will be able to buy. But you may be able to buy in small volume, number one. Number two, you may have to do research, right? You will have to do research on this, and then decide what to buy. So mutual fund is a vehicle which allows you to pool people's resources. So when I manage money, when I said I manage money for foreign institutions and domestic investors, so if all of you were working and if all of you were to give 100 rupees each, right, the 30 odd people over here, the 3,000 rupees I will invest, and I will have the time, because this is my only job. I will have the time, the resources to search, to go and then I will invest. So mutual fund is nothing but a vehicle to collect money from others and go and invest. So from your perspective, since you are busy with your entrepreneurship or your job, you don't have time, you can give the money to a mutual fund, and the mutual fund will in turn invest, and you will get the benefit of compounding.
Can you show that graph in there are high risk and
Yeah. So any equity product, it is considered high risk. Why it is considered high risk? Because I showed Hindustan Lever, which was there in 2000, went out of the top 10, right? And suddenly some other company came. So in a business, there are risks which come up, and that can have an impact on your returns. Therefore, we call it high risk relative to a safe, say, bank fixed deposit. My parents would never invest in equities, because they only like to go to an SBI, put it in fixed deposit, get the regular income. So that's it will give you today around 10%. So low return, low risk. So the same fixed deposit kind of product are these: liquid fund, bond fund, gold savings fund, etc. But if you were to invest in businesses like Infosys, ITC, Bharti, you are taking higher risk. So that comes over here. All the equity funds. So this is a tax saving fund, same like this, long-term equity fund of funds, index fund. They are all considered equities. Meaning when you give the money to these managers, they will only invest in equities. So you will have a higher return, but you will also have a higher risk. And here the risk is defined as the up and down. Like say in equities, what happens is in 1 year you may get 20%. In the next year you may get minus 5%. Third year you may get plus 10%. Fourth year you may again get plus 10%. So it will be all over the place, but over long periods it will still give you very good return. So if you are investing in equities, your time horizon should be very long. It should not be short. Then you look at this: higher risk and therefore the higher return, lower risk, therefore the lower return.
Sir, what is the scope of market for technological products on agriculture and resource management in the next few years?
See, the need for technological products in agriculture is very, very high. So India has not used technology at all, or very little, right? You have some markets like say Punjab and some in the western where we are using some tractors, but you require harvesters, combines, agricultural equipments. There are tons of them which you just go and Google this company called John Deere, right? They are into agricultural equipments. The kind of equipments which they have is humongous. Does India need? Yes. But why India is not able to do? Because of lack of land reforms. So in India, just go back, if you have family in the villages, or if your own family you might have seen, I can see in my place. My grandfather had a very large land, right? But when he died, 5 sons had to take up the same land, right? If you had 5 acres, now it became 1 acre for each. So when the land becomes small, it doesn't make sense to invest in technology, because then you are not deriving the benefit. So now my uncles don't invest in technology, because what was a 5 acre land which required some equipments today became a 1 acre land, and therefore no need for technology, therefore productivity is less. So if India is able to do some reforms in land, then I think the demand will exponentially grow. But if they don't, even then I think the demand would still be strong. We would require, government would come up with some scheme or the other where technology would be used. But in the US, if you go, you can see large tracts of land. So the same guy would own 50 acres, 100 acres. So he won't have more manpower, but he would have tillers, harvesters, grinders, tractors. And the tractors are also not small, the large ones. So India can become like that if we are able to do land reforms. If you don't do land reforms, you can still do certain things. And the best would be, suppose you are able to come up with a tractor which can be used in a small land and increase the yield. That will be a killer, right? Because then you don't need the land reform. You have come up with a product which suits that land. That will be a huge money spinner.
Sir, you've shown a graph where how the population has been changing. With the emerging population, would our Indian economy concentrate on agriculture? Because people are moving into tech-based business employment.
Yeah, see, at the end of the day, whatever you do, you and me need to eat, right? So today there are 100 farmers coming up with, say, 100 kgs of eating item. Tomorrow, the number of farmers may not be 100, it may be 50. But they would still come up with 100 kg of food. So agri would definitely, even in the US, people are still consuming, agri is needed. But less number of people are producing more number of goods. That is what technology is supposed to do. So in India it can happen. But not everywhere you should think only in terms of replacing the people with technology. Because you have to also you look at the social impact, right? When you ask somebody to leave a job because now a robot has come, it has an impact on him, on his family. So as an entrepreneur, don't just blindly look at technology. How can it be adopted? Or how can that guy's skill sets be changed? So that if he loses job here, can he get something else? That you need to address. But we won't stop eating. In fact, in Western world, the food is actually wasted. Right? Because there is so much of food available. In any house you go, you open the fridge, you will have everything, and after 2-3 days, half of the thing will be thrown out because it has become stale. So those kind of issues even we will have if we continue to follow the same Western kind of growth model. But we can change, certain things we can change. Yeah. I think there will be, bubble will come when many people start and some fraudulent guys will be there. That bubble will always come whenever some new trend comes. But will the trend go away? I don't think so. I think people are today conscious. If you look at the disease profile of India today, right, very high diabetes, right? So you know that sugar and rice is not conducive for our health. So there is a demand for millets. So there is a demand for organic food because you don't want to consume those pesticide infected food. So I think it will not be a fad. It will become mainstream. But to become mainstream, certain costs have to come down. Today, if you go and buy an organic product, it is at least 2 times the normal price, right? If a rice costs 100, an organic rice costs 200. But if you can give me organic rice at 100, then I think more people will consume. If Patanjali is a business model, I don't know whether all his products meet all the requirements of what we call standards, but there will be a demand for this kind of products, definitely.
Today, a lot of startups have come up like based on the copy-paste model from the Western countries. And do you think that is a feasible model in the long run?
You see, copy-paste, not all of them will work. You have to adapt it to the Indian need. If you just launch a product which US, our design systems, delivery systems, culture systems could be very different, right? And therefore it may not work. Whatever you are adopting, you take it, try and see whether it makes sense in India, whether it needs to be tweaked, and then launch. And it can be sometimes, very, very simple things can also happen. Like the reason I remembered was I was talking to my friend's son. As much as sometimes a product name can be a devastating when you launch in a country. Like one of the large car companies had launched a product in Europe. It was a huge success over there. And they launched the same product with the same name in Latin America. And it was a huge flop. Can you guess why? Name. Right? In Latin America, that name was considered as a male genital organ. So nobody bought. But a large company can make that mistake. So when you adopt, you have to write from name to what it is, what are you trying to do, will have to be seen. Now Indian model is again a very different model we are coming up, right? A lot of delivery, cash on delivery was not there anywhere in the world, right? It came in India. So now the Western world is thinking cash on delivery. So you can adopt certain things, but you have to change. You have to look at what is driving India.
But you are also facing competition from the global leaders also, right, in India. So do you think now most of the startups are not profitable, right?
Yeah.
So do you think in the long run, like these people will be will be able to stand up to the competition?
Some I think will stand up. Again, see today the reason why so much startup is coming is, in the Western world, interest rates have gone to literally zero, right? It's very easy to borrow. When huge amount of money is available, all kind of jokers can start startups. Because everybody is desperate. If zero is the interest rate you are getting, if I get even 1%, I'm willing to fund you. Because for a guy in the US, it is better than keeping it in the bank where he is getting zero. Right, so 1%, 2%, so you have some idea which looks TK, because it doesn't cost me much. But it can't remain like that. Monetary policies cannot be like this. If interest rates were to come back to normal, then many of these startups will not get funding. It will collapse. Then you need to see who has built an organization to sustain. So as I said, housing.com, brilliant guy, great idea, but very poor organization building. Complete flop. So some of them will fail. I would guess many of them would fail, but some of them I think would sustain. Would sustain.
So considering many nations are a developed nation and India is a developing nation, and environment is a very big issue for developing countries as well as developed countries. And these things making environmental policies and products related to those things. So what has happened, I am not aware of, just I want to know things from your experience. In US, what was the profile of this environmental laws, or were they implemented, or what were the products which were in them? And now since India is a developing country and Make in India is going on, and more industries are going to be set up, so population is going to increase, and this environment consciousness, we don't know are environment conscious, right, or how much they are. So what is the future of it? Or
see, you are right. Today the Western world is coming and telling us, control the pollution, but they have also polluted the world when they were growing up, right? So if you look at the mining industry, particularly manufacturing, even in the US they had a pollution problem. But as people became more and more aware of the harmful impact of that, they started to focus on reducing it. Then what happened? Some of that went to the emerging markets, and then the pollution went up. But now what US is doing is they are trying to do the same manufacturing, but with the help of better technology. So they are using robotics, let's say in the US, for certain things. They are using renewable energy to reduce the pollution levels, and they are succeeding reasonably well. So growing economy will always have challenges. Like in our case, to some extent it is all noise, pollution and its impact, but we can't stop manufacturing. Then how do we feed our people? So we need to have that. But at the same time, today technologies are available to reduce the impact of pollution. So you have to balance that. Like nothing against this city, but I was told at one time that the leather tanneries here pollute a lot. But are there technologies available, better licensing system available to control that? I think we have. If we implement that, then it can be reduced. It can't be eliminated, but it can be reduced. So I think those changes will be serious changes. You would need to implement that, and use of technology to reduce some of them can be done.
But like the population of India is in general environment conscious?
I think they are. No, you go to actually see in city now people are becoming more and more conscious, but in rural India I would say they are actually ahead of us, because they have dealt with nature, right? They are more close to nature than you and I are. So they know when a tree dies, why is it dying, and they probably take better steps to bring that under control than we do. We are so caught up in our daily running. Bombay people don't even have time to look at a tree and appreciate that. That rat race keeps them on. But people are becoming more and more aware, Therefore, you have to take it as a serious risk. If you are launching any product today, please ensure that it is very environmental friendly. Otherwise, problem. Last couple of questions. Last two questions.
When can you expect the new tech startup going public in India?
I think it should start anytime this year itself. If the markets, stock markets go down, then maybe it will get postponed. If the stock markets perform well, then I think many of them will get listed this year itself.
Like the e-commerce which you're talking?
Yeah, e-commerce ones. They'll get listed. Yeah.
So these days, big players like Tata and Kotak, they are starting investing in these startups. What is the concept behind this? What is their motive to invest?
So many of them would be like, sometimes a startup today can become a serious challenger to you later on. So you may want to start incubating some within your group, because you don't know how large that opportunity could be, or theoretically you know that the opportunity is large, but how do we ensure that we are not losing out to that startup? So like Infosys used to tell me long back, the reason why they invest in startup is the technological changes are so high. If they don't invest and a new technology comes, that new technology may take away all their market share. So they would like to know what are the new technologies coming. So they invest. Similarly, in the case of Tata, they are, let's say, stuck up with a chroma kind of model in retailing, and then a Flipkart comes and takes away. So Tatas don't want to lose out after having built all these years to a Flipkart. So they may say, let us also start an e-commerce venture. Let's put some money behind it, try to understand how large that opportunity is. Flipkart may survive, but let us also survive. So they will do that. Each company will have to invest in certain startups to be aware as to what is happening in that segment. Otherwise, you may become redundant. Like the telephone companies, MTNL became redundant when mobile came. Videsh Sanchar, VSNL became redundant when it became easier to call to the US. And Tata's bought VSNL, by the way, if you remember, right? So sometimes you will buy and then something new comes up, gone. So therefore you may want to do. And last, I think what people like Tatas would also do is, a lot of you guys, young talent, you join Tatas, let us say, but you are not excited with doing traditional work. And I don't want, if I am a Tata Group company, I don't want to lose your talent. So I may say, you want to feel like an entrepreneur, you want to build an entrepreneur, let me give you capital if you are okay with that, right? But let's have a partnership. So if you come up with a cracking business model or some changes, I will also benefit, you will also benefit. You will get the thrill of being an entrepreneur. I will ensure that my business is protected. So large companies will definitely do that.
Thanks a lot.
Thank you. Thanks a lot. Thank you. Thank you.
It was
Thanks.
a great pleasure
Sure.
inviting you for the talk.
Thank you.
Small
Oh.
gesture from Samiti.
Thank you. Thank you.